Welcome to the future of finance, where blockchain, crypto, and digital currency are revolutionizing the way we think about money. In this video, we'll explore the history of blockchain, the rise of crypto and digital currency, and how these technologies are transforming the financial industry. By the end of this video, you'll understand the future of finance and how blockchain, crypto, and digital currency are changing the game. What is blockchain? Simply put, blockchain is a decentralized digital ledger that records transactions across a network of computers. It's secure, transparent, and tamper-proof, making it an ideal solution for financial transactions. History of blockchain. The history of blockchain technology is a fascinating story that spans several decades. While blockchain is often associated with Bitcoin and cryptocurrency, its roots go back much further. In the 1980s, computer scientist David Chaum proposed the idea of a decentralized digital currency. This concept laid the foundation for the development of blockchain technology. However, it wasn't until the 1990s that the first blockchain-like systems were developed. One of the earliest examples of a blockchain-like system was the Hashcash proof-of-work system, developed in 2002 by Adam Back. This system used a decentralized cryptographic approach to verify transactions and prevent spam. However, it wasn't until 2008 that the modern concept of blockchain was born. In October of that year, an individual or group of individuals using the pseudonym Satoshi Nakamoto published a white paper proposing the Bitcoin protocol. This white paper outlined the concept of a decentralized peer-to-peer electronic cash system that used a blockchain to record transactions. The Bitcoin blockchain was launched in January 2009, and the first block, known as the Genesis block, was mined by Satoshi Nakamoto. Initially, Bitcoin was met with skepticism, but it slowly gained popularity among tech enthusiasts and libertarians. Today, blockchain technology is being used in a wide range of industries, from finance and supply chain management to healthcare and voting systems. Its potential to provide transparency, security, and efficiency has made it a revolutionary technology with far-reaching implications. Rise of crypto and digital currency. In 2011, Bitcoin's price began to rise, and it gained more mainstream attention. This led to the creation of alternative cryptocurrencies, or altcoins, which were designed to improve upon Bitcoin's design or offer new features. Many of these altcoins were created through initial coin offerings, ICOs, which allowed developers to raise funds for their projects. One of the most significant developments in the cryptocurrency space was the launch of Ethereum in 2015. Ethereum introduced the concept of smart contracts, which are self-executing contracts with the terms of the agreement written directly into lines of code. This innovation opened up new possibilities for blockchain technology and paved the way for the creation of decentralized applications. The cryptocurrency market experienced significant growth in 2017, with Bitcoin reaching an all-time high of nearly $20,000. This growth led to increased mainstream recognition, with many major financial institutions and companies beginning to explore the potential of cryptocurrencies. Today, cryptocurrencies are being used for a wide range of purposes, from cross-border payments to supply chain management. As the cryptocurrency market continues to evolve, we're seeing the emergence of new technologies and innovations. For example, the development of decentralized finance platforms has enabled the creation of decentralized lending, borrowing, and trading protocols. We're also seeing the growth of stablecoins, which are cryptocurrencies pegged to the value of a fiat currency. Despite the many successes of cryptocurrency and digital currency, there are still challenges to be addressed. Regulatory uncertainty, security concerns, and market volatility are all major issues that need to be resolved. However, as the technology continues to mature and evolve, we can expect to see even more innovative applications and increased adoption in the years to come. Cryptocurrency is a digital or virtual currency that uses cryptography for security and is decentralized, meaning it's not controlled by any government or institution. Bitcoin, Ethereum, and Litecoin are just a few examples of popular cryptocurrencies. The cryptocurrency market has grown exponentially in recent years, with the global market capitalization reaching over $2 trillion. How blockchain works. Blockchain technology is a decentralized digital ledger that records transactions across a network of computers. Imagine a digital spreadsheet that's duplicated thousands of times across a network of computers. This spreadsheet is called a blockchain, and it's constantly updated to reflect new transactions. Each transaction is verified by a network of computers, called nodes, which use complex algorithms to validate the transaction. The verification process involves several steps. Overall, blockchain technology's decentralized nature, cryptographic security, and consensus mechanism makes it a secure, transparent, and efficient way to record transactions and store data. Real-world applications, cross-border payments. Blockchain-based systems are enabling faster, cheaper, and more secure cross-border payments. Supply chain management. Companies are using blockchain to track inventory, verify authenticity, and optimize supply chain operations. Identity verification. Blockchain-based identity verification systems are being used to secure personal data and prevent identity theft. Blockchain technology and its advantages. Blockchain technology is a decentralized, digital ledger that records transactions across a network of computers. This technology has several advantages that make it an attractive solution for various industries. One of the primary advantages of blockchain technology is its security. Since blockchain is a decentralized system, there is no single point of failure. Transactions are recorded on a public ledger, and once recorded, they cannot be altered or deleted. This ensures that transactions are secure, trustworthy, and tamper-proof. Blockchain technology also provides a high level of efficiency. Traditional systems often require intermediaries to verify transactions, which can be time-consuming and expensive. Blockchain technology eliminates the need for intermediaries, allowing transactions to be processed faster and at a lower cost. Overall, blockchain technology has numerous advantages that make it an attractive solution for various industries. Its security, transparency, efficiency, scalability, and immutability make it an ideal solution for applications that require trust, accuracy, and reliability. The future of blockchain and finance. The future of blockchain and finance is exciting and rapidly evolving. As blockchain technology continues to mature, we can expect to see increased adoption and innovation in the financial sector. Blockchain technology is also being explored for its potential to improve cross-border payments. Traditional cross-border payment systems are slow, expensive, and opaque. Blockchain-based systems, on the other hand, enable fast, cheap, and transparent cross-border payments. Regulatory bodies are also starting to take notice of blockchain technology. Overall, the future of blockchain and finance is bright, and we can expect to see significant advancements in the coming years. Conclusion. In this video, we've explored the history of blockchain, the rise of crypto and digital currency, and how these technologies are transforming the financial industry. As blockchain, crypto, and digital currency continue to evolve, we can expect to see even more innovative applications and disruptions in the financial industry. Thanks for watching. If you want to stay up to date on the latest developments in blockchain, crypto, and digital currency, don't forget to like, comment, and subscribe for more videos on finance, blockchain, and emerging technologies.